Good evening, everybody. We're kind of changing the plans tonight. We were going to do a session on profit taking. I'm going to do a real quick profit taking session, but the reason we're going to do it real quick is because we've got so many things going on in the market that what I'm planning on doing is over the holidays, meaning I don't know how many. I guess we're getting toward the holidays. As we get closer to Christmas, we'll do our last session on Christmas Eve. No, we won't. Ebenezer, who are you talking to here? But over the Christmas holiday, we'll probably do maybe 3 or 4 training sessions, of which one will be profit taking. So I'm going to go through this real quick because we've got a lot of charts that people have been asking about. So one of the biggest things that we have as far as profit taking is taking the profits with the fear that things are going to start moving past us. So here are the kind of some of the fears that we have, and I'm going to go through real quick. A lot of people have fear of entering a trade, fear of taking profits, fear of taking profits too soon, changing strategies during a trade, trying to figure out how to close out a losing trade, where to set stops, and letting intraday charts influence the trading. We're going to do this real quick because we got a ton of stocks that people want to turn a trade into a hold. So taking profits. What is normal human nature? Fear of taking profits too early, and then having it whatever you're looking at, skyrocket on you. Well, that can all be eliminated by using the candlestick charts. There it was. Fear of taking profits, and then the profits or the price taken off without you, which is now eliminated with candlestick signals. And fear of not getting the big profits, the big breakout moves. Candlesticks also eliminate that process. So this is what causes the fear of closing a trade that doesn't look good. Is seeing something like this, closing it out, and then the next day they gap it up like this. And that's what a lot of people ruin their investment process, because that was a day when you should have closed out this trade. It wasn't going anywhere. There was no way to foresee this. But that's not the process of successful investing. Successful investing is closing out when you're supposed to, and then figuring out what to do on that new trade. G. Mallow, hold on to your individual stock charts until I get done with all this. More than likely, we will be looking at what you are requesting when we go to live charts, which will be very soon. So knowing candlesticks creates a natural discipline. It gets rid of that fear of looking stupid. Here's the process that most people have when they have a profit. Oh, that's what happened to you last week? Okay. So a lot of people say, oh man, I've got a profit. Now, this is the fear factor that was created in myself because when I was a stockbroker for 8 years and not having any method of analyzing what a stock price was going to move other than what your analysts were telling you why you should be buying stocks and having no more idea about what made stocks go up or down than anybody else, that a lot of times if I had a profit in a trade, what was our first reaction? man, we don't want to turn this into a loss. I better take my profits so I don't look stupid and have it turn into a loss. And then figure out, man, that wasn't the reason to be closing a trade just because I have profits. Let the chart tell you when it's time to take profits. That's at least what I gleaned now with using candlestick charts, telling us what the probabilities are when investor sentiment is changing. So we've got the benefit of a visual analysis where we can assess those probabilities, and knowing candlesticks allows us to accurately observe what I call observe the obvious. When is it time to buy, and when is the probability starting to go against you to take profits? Now, we always say you want to hold something as long as it stays above the T-line, but you got to remember the most important criteria for closing out a trade or buying a trade is the signal itself. So what the emotional factor is, if it's time to start taking profits up here because you're in the overbought area, you're a little bit away from the T-line, you can close it out with the idea that if it comes back up through this level, you can buy it back. But why would you close out something that you started seeing sell signals but it hadn't closed below the T-line? Because the probabilities are starting to go against you. You're in the overbought area. Stochastics are starting to roll over. You've had a good profit. And what most people have the problem with, and I say most people is because this is what I had a problem with, was closing something out because I've got a profit, but I'm afraid that it's going to do this, versus closing it out and then seeing on candlestick charts when it's time to get back in. Because at this point, you got to start asking yourself, do I have better probabilities of this going up or pulling back or going sideways up here in the overbought area? And if I have probabilities that are starting to go against me, let's take those profits and go find another chart where the probabilities are telling us with a high degree of accuracy that we've got things going in our favor again. There's other things, and this is why I'm going to kind of stretch this out over the holidays, where we can concentrate on situations of when do you sell? You have a big, huge move. When do you sell? Well, this is where we kind of direct people to take a look at your 10-minute chart. And there's our big bearish harami, and I've discovered, whether you're trading stocks or futures, that if you've got a big initial price move, the first that you start seeing selling, you take your profits. Because what does that common sensely tell you, if that's a word, common sensely? That tells you the buyers are buyers, and now the sellers are starting to come in. We've hit an equilibrium. And that equilibrium now tells us we need to get ready to be prepared for the next pattern, or we finally hit a stage where all the exuberance is left, and it will trade like this for the rest of the day. Rule of thumb, sell when the price is far above the T-line. The T-line, not necessarily the 20-day moving average. The T-line is much, much more effective. So this is, again, we observe the obvious. You're in an uptrend. Your stochastics in the overbought area. Now you're starting to see that there's a resistance level. Worst case scenario, take profits, move to something else, but keep this on your watch list that if they turn this around and go into the next stage, you can always buy back. Andrew, we'll get to that one. Richard, it's up to the time frame. If you're swing trading, I'm using the daily chart. My trades are usually anywhere from 2 to 10 trading days. But if something lasts longer, and you could be in something where it might last 30 days. And you use our basic rules. You stay long as you don't see a sell signal to close below the T-line. However, look what was happening right here. Stochastics were heading down. Lots of indecisive trading. What was that telling us about the strength of the bulls at this point? It was running out. We didn't know whether we were going this way, or this way. And the whole point of using candlestick charts is that you have the ability to see which direction something's going to move with a higher degree of probability. Well, if you're looking at a chart, even though you own it, you're starting to think, well, I don't know which way it's going to go. Here's what happens to most people's mental process. They become married to the trade because they've made a decision to get into this trade, and it would be terrible if they decided to get out and then it went up further yet. Instead of saying, is this the best place to have my money, or should I take my profits and go find another chart that looks like this? L. Good, who is that answering? Richard? That is the process that you can go through, is take whatever time frame seems to work for you best. So when I'm trading futures during the day, I'm using the 10-minute chart as my bellwether, because I'm probably going to be in and out on the same day. If I'm day trading or swing trading, not day trading, but swing trading stocks, I'm using a daily chart to make my decisions. And then I use the 10-minute chart to tell me if things are getting too out of hand, moving too far away. My stochastics are 1233, slow stochastics. So anyways, when I get to a situation like this, and we can't tell which way it's going to go, take profits. There's tons of other charts where the probabilities can be seen are going in your favor. Hanging Man, Doji, I mean, what you're seeing up here is a lot of indecision. Start taking profits. Even though you haven't closed below the T-line, you can start taking profits, or at least close out half the trade and move on to something that looks more like this. Running out of steam, a series of dojis after a gap up. So this is the things that we're going to be really concentrating on. When do most people buy? They buy exuberantly at the top. What shows exuberance at the top? When they start gapping up in the overbought area. Anytime you see a gap up situation in an overbought condition, get ready to start taking profits. These are the alerts. Or a resistance level. Again, there was another gap up in the overbought area, and then it couldn't go anywhere. You could start closing out half the position, and then close out the other half of position. The worst case scenario is if I've got a good profit, if I bought on this slow curve breakout, and saw eventually it gapped up, and then did a doji, wasn't going anywhere, you say, let's take off half the position, or the whole position, and buy if it comes back up through this level. Because we can see that the probabilities are starting to go against us. So I'm going through this real quick because there's 5 different elements that help you take profits. The gap up at the top, the indecision at the top, the overbought condition, and one simple evaluation. Is this now the best place to have my money, or is there another chart that looks something like this? And you can sell at resistance. Yes, that's one of the 5. So anytime I start seeing this in the overbought area, I'm starting to take off some of the position because the probabilities are going against us. Let me skip down here. There's another one. You can see there's a resistance level, and they hit that and sold off. You're still not below the T-line, but it's time to take profits when you can see this. So I've gone through this real quick. because I want to concentrate more on each one of the 5 aspects of when to take profits. But this basically helps you create a natural discipline of when to buy and when to sell. And it kind of eliminates your fear of taking profits, that you can logically tell yourself, I'm now getting out of positions when the probabilities are greatly in my favor that it's time to take profits. So I've got a couple live charts to illustrate some of the processes for when to get in and when to get out of trades. So let me do this. Let me see if I can do this without goofing up too bad. Move this over here. Not doing this. The most roundest night at King Arthur's Round Table. Circumference. Oh man, where do I get this stuff? I think that one was for the engineers in here. Okay. We are making some very good money in this market, even though the overall market trend, especially on the Dow, has been very lame. The one key aspect is the fact that they've kept the Dow pretty much above the T-line. Had a big selling day that would have told us it's time to start taking profits. But notice what that day was. About the only day, really, that sold off hard. How long is my Santa book? I think it's 112 pages. It's got numerous illustrations in it. But each chapter chapter is that if you're reading to younger kids, you read a chapter a night. And oh, for older kids, I think there's about 14 chapters. I can't even remember. I haven't even. So it's 112 pages, or 100. What did I just say? 114 pages. Bill, I've been looking for, not to get off topic here, I've been looking for somebody, an agent, to take it to people that might want to make it into a movie, not necessarily a full-length movie, but more of a children's movie where you've got different different topics, like how the elves developed the Santa's bag that he could fit everything in. How the one elf taught the reindeer how to fly, and that sort of thing. If anybody has any people that we could get this to, I'd be glad for any suggestions. So the Dow moved up nicely, and the NASDAQ, as you can see, is now hitting all-time highs. And it's been just a J-hook pattern with the J-hook telling us there's more upside. So here's what I'm wanted to demonstrate tonight, and that's why I wanted to get away from the stock or the taking profits, and I'll show a few of those right now. If you were short and you're in the oversold area and you're starting to see some buying, that's kind of telling you the probabilities are starting to go against you. It's probably time to start covering the short position. That's GSX. Things like Apache are still above the T-line, but you've had a strong sell signal. Stochastics heading down. So, but crude oil has been moving up. So this is what's created the aspect of containing or holding on to your long positions in oils. So things like Occidental. Again, an evening star signal, and it's trading right here. We closed this one out, closed out the calls on this, because with the sell signal and it not moving, you lose a lot of time value. Goose was another example of the probabilities starting to go against you. There was your bearish flutter kicker signal. There was your bearish evening star signal failure at the 50. However, down here, you had an inverted hammer. That was the place to put your stop, because the probabilities in the oversold area that if you started seeing buying, you wanted to close out that position. DD, yes. Anybody that buys the book from Amazon, is just email Abraham that you bought the book on Amazon, and he will send your address, and he will send you a free mouse pad. No, that's not a gap up. Who was asking that? Oh, Misha? Where does a gap up occur? It occurs at the top of a trend. That's just bullish confirmation of the current trend staying positive. A gap up is when you see it well up in the overbought area. Okay, so the patterns have been what has been effective. Myra, we could see how it did a J-hook pattern. It's been working very well. So the J-hook type setups are working not only in two factors for investing as far as direction. Well, number one, the direction. Let me make this smaller. This is why we were recommending upworks, because of this facet right here. And if I can make this smaller, if this is wave 1, wave 3 now has that potential. Now there's 3 benefits, if I can remember them, to trading the patterns. 1, maybe even 4. 1, it tells you with a high degree of probability the direction that the price is going to move. 2, it's going to give you, Raymond, yes, these are always recorded. The uptrend is usually a much stronger magnitude, usually of the same magnitude as the first trend, versus just merely an uptrending stock during an uptrending market. 3, it gives you the ultimate time to get into that position, where we can see where the breakout level is. That's the time where enthusiasm is going to come into place. And the 4th one is that if you buy a pattern, if the market all of a sudden turns the other way, usually a pattern will take a little bit longer to reverse, because this is a buildup of investor sentiment. So you've got these type of charts. You said you got stopped out. Who was telling? I can't remember who said they got stopped out. However, here is the one thing. Oh, G Mallow. Here's the one thing you want to do. If you got stopped out, that recognizing the pattern. So if you bought on this day and it came back down and closed below the T line, I would have stopped out. May have been buying back here because what could we see was happening? Or buying today because where did this break out? Right, whoops, right there. Now, why was this a good breakout? Because we could see the bullish engulfing signal and we could see the pattern, the J-hook pattern setting up. What's this kind of imply? New investor strength has come in. Look for wave 3. So these slow curve, rounding bottom type setups are just additional. What did I just do there? That's not, oh, that's because I wrote the wrong one. You can see what's happening here. Look at that slow curve. Now look at this slow curve. You can start buying this one if it comes up through there because that gives you that type of potential. Not necessarily, Will. I can't remember. Oh, it might have been a short right in here. But then look what was happening. They weren't confirming. So we would have closed out that short position. But then what could we see as far if we took this chart and did this? Saw some buying, indecision. It should be going in this way, to this direction to keep short. Now they started buying positive, you close it out. But now what can we see is happening? We can see this trajectory, so it becomes a completely different pattern at this point. So Upworks was up today. I don't think that's the breakout level. It's starting to show us that bullish sentiment is coming in. Is the slow curve usually the start of a J-hook? It can be. The difference between a slow curve and, let's say, a fry pan bottom is a slow curve usually occurs in the trend, whereas the fry pan bottom is usually a big bottoming action. Will, and that's another aspect of candlestick analysis, is what might look like a good short needs confirmation, and that's where the graphics, the candlesticks kind of tell us, oops, this short isn't working, let's close it out. Now, if you always keep in mind, which was something that I had to keep in mind, or had to learn many moons after I've learned candlesticks, was that approximately 1/3 of my trades aren't going to work. That used to insult me, or I took it personally. But when I realized that 1/3 of the trades aren't going to work, that just told me get out of a bad trade and go someplace else, or start analyzing what that chart is actually doing. What does it mean when you see your buy be executed at the bid? Oh, Joey, that usually means something happened just at that timing that you got a good trade set up. I very rarely have that happen. There you go, Will. DD, yes, you pay attention to the bid-ask spreads on options. And it does influence whether you want to trade that position. So if I see a stock, and usually I'm looking, I'm going to talk while we're moving from chart to chart, I think. If I see a good size, well, first of all, I want to see what the volume is in the stock. If it's 1 million shares, probably not too much of a problem. If it's 700,000 shares, might be a little bit more difficult. And if it's less than that, more than likely the volume in the options are not going to be all that great. So the first thing I do is look to see what is the open interest. Now, obviously, if there's only 32 contracts open interest, you're going to have a hard time getting in and out of that position. If there's 3.2 million or 3,200 contracts open, you probably won't have as much trouble. Secondly, if you see the bid is 2 and they're asking 260, that also tells you the volume is probably not very big. But if you really like the option, the first thing I do is I put my bid in at the halfway point, let's say at 230. Well, if it sits there for 5 minutes and they don't hit it, maybe I'll move it up to 235 or 240 for the next 3 to 5 minutes. If they don't hit it, that means it's going to be too hard to get in and out of that trade, so I go on to something else. Let's see. How much are you willing? How much are you? I don't understand, DD. I don't know. Oh, how much spread? Not very much. Again, the smaller the spread, the more liquid probably the options are. And the spread is going to be a function of how liquid the options are. So if you can see the bid is 2 and they're asking 260, and you see there's only 54 open contracts, that means you're going to have a hard time getting in and out of that trade. Now, obviously, if you're trading something like Apple options, the bid and the difference may be very small because the closer the bid and ask spread, the more liquid it is. The overbought and oversold is based upon stochastics. If you see something above 80, the stochastic is above 80, they're in an overbought condition. Below 20 is oversold. What does it mean? Oh, it's just stochastics are just telling you based upon a formula, and it's based upon the bid, the open to close, high and low, of whether you're in the overbought area or your oversold area. So obviously up here, or up here, you're in the overbought area. You're getting up toward 80. I'm going to find a better chart to illustrate that. Volatility will also affect the spread, yes. No, overbought just means the price on this formula basis is that it's now in an overbought. Let's see. The stochastics just kind of tell you whether things are just a formula to tell you whether things are overbought or oversold. Let me find a better chart to illustrate this. Right here, you can see stochastics in the overbought area. That also coincides with the fact that you've moved that far away from the T-line. So when that's going to be part of the process of when if you're in the overbought area and you move that far away from the T-line, that's where you flip to your 10-minute chart. That's what we teach people is if you're up here, watch your 10-minute chart. Time to take profits. Now, we're buying, even though we're in an overbought condition, because of a different factor. That is, that we're in a breakout of a wedge formation. Let me see if I can do this. You can see this wedge, and they broke out. So now what do you have? Wave 1, wave 2, going into wave 3, and what do we expect from wave 3? To be the same magnitude as wave 1. Bob, I put MACD. Sometimes I can put stochastics and MACD as a histogram on the same chart, but I don't use MACD to make a decision. It just adds as another little fluff to the analysis. The most important aspect, obviously, is the signals. Everything else becomes a confirming indicator. Stochastics are pretty close to what the current price is doing. MACD is a slight lagger, or a slight of a lagging indicator. Don't pay attention to short float, because that's not what moves prices. Price is what moves prices. Is also a completed cradle pattern. No, remember a cradle pattern is a flat. It's, in this case, more of a wedge formation. Where does wave 3 start? Just anywhere in here. It's not exact, but if you can see this was one price move, somewhere right in here when this next move is starting, that's when you calculate this. Now, will you always get there? Not always, but if it starts getting to that same magnitude, that's when you become a little bit more diligent as far as watching for sell signals. And wave 3 should be approximately the same as this right here. So the wedge breakouts, remember, you're buying the signals when you're in the oversold area. You're buying the breakouts when you're probably in the overbought area. So the same type of chart setup right now is occurring in fuel cell. We started buying this one today. As you can see, there's kind of a wedge formation. And notice how they held here on the T-line. This could be the start of another wave 3. So this is the process of, a lot of times we'll say, oh, this one's doing well, doing well. Somebody will say, can we buy it here? And the answer is no. You should have watched to see where the trend started. Know the different things like a slow curve, a breakout. So that's what we try to illustrate here is this is the potential of another strong price move. We want to be buying on positive trading after this wedge breakout. We're buying at the beginning of the trend, not as the trend moves up. And this is where most people lose their money. This is why, as a stockbroker, most stockbrokers are very terrible, which I was a stockbroker. Because what is normal human nature? Oh, this one's doing good. I'm going to buy it. Well, usually by the time everybody starts buying it, that's the time the smart money is starting to take their profits. Do waves have typical time frames? No. If this was a wave that took this amount of time, kind of equate that. If this wave looked more like this, the next wave would look kind of more like that. Okay, so what we also want to look for as far as breakouts is this is where candlestick analysis dramatically improves the visual analysis. Look at this big fry pan bottom. You couldn't trade this one way or the other until they broke it out. It was up 24% today. Let's get all these things off of here. We were buying here. Why would we buy in a stock that's already up this much? Because this breakout told us there was a new dynamic. There's probably a lot more upside. Whoops, another one that I've... The MGEN. Here's another. Where do these things come from? kind of another wedge breakout. And look how this one started. So this is where you put 2 plus 2 together. Look at this little kicker signal off the T-line, breaking out through this level. What's the prospects on this one? It's broken out of a wedge. The probabilities of it moving higher is extremely strong for a couple reasons. One, you had a kicker signal, which is one of your strongest candlestick reversal signals. And two, it broke out through this wedge. So that just adds the probabilities of you being in the right place at the right time. Yeah, the doji rule is that the price is usually going to move in the direction how they open after a doji. So even on this one, the doji rule after this wedge is if they open this positive, more than likely it's going to trade positive, which further enhances the assessment that they've broken out of this wedge formation. So the advantage, again, of candlestick analysis is a fry pan bottom breakout. This did what we call the message. When it broke out, the message was they took it up, but they did profit taking. But what was the message? The message was they came into this with great enthusiasm. There was profit taking, so what do we watch? We watch for the profit taking to end, which in this case was a bullish Harami doji. What is a top equivalent to a fry pan bottom, or does no such rounding tops exist? What is a tops equivalent? What is a tops equivalent? Oh, a dumpling top? Oh, rounding is a dumpling top, yes. So if this was up here and you could see a big rounding top, then you get ready for the opposite. Still coming up to the, coming to the 50-day. It's coming up to the 200. This is the 50. This is the 200. So, yes, you probably want to watch to see what it does here, except you're still coming out of the fry pan bottom. You only watch to see what everybody else is doing at these levels. But we know what the results of a fry pan bottom is. A very strong price move. What candles make up a kicker? A kicker signal is one of your 12 major signals. It's a candle that opens here and closes down here, a red candle. The next day or time frame, they gap up above the previous day's open and go the opposite direction. So you've had a gap up and go in the opposite direction, or essentially investor sentiment has been kicked in the opposite direction. Solo, that you could consider that a kind of a wedge. I would, you could put it in that category. The worst case scenario is if this opens positive and does a doji, kind of a bullish flutter kicker. A bullish flutter kicker is the same thing as a kicker. It opens here, closes here. The next day they gap it up at the previous day's open and do a doji. Then we have a doji rule. If it opens positive, it's going to trade positive. So if you have a green candle, essentially, positive and trade positive, green candle. If you took out this little flutter, you essentially have a kicker signal. Okay, let's see what else we got here. Overstock. Use this in the afternoon newsletter. Look at your morning star signal in the oversold area. So if you were short, you started seeing dojis down here, what is the best way to cover your short position or stop out? you put a stop just above the high of the doji, because logic says if they open a positive and trade positive, they're probably coming at least back up to the T line. Close out your short position. Well, now you got a morning star signal and a doji sandwich that broke through this level. That morning star signal was your first indication there was a change of investor sentiment. Oh, I'm sorry, DD. If it's a doji, a true doji opens and closes right at the same level, or very close. If it does something like this, where the body is kind of not a major factor in the price move, it's called a spinning top, because it looks like a spinning top. But it has the same characteristics as a doji. It tells you there was indecision between the bulls and the bears. So the tails or the shadows are the important factor as far as the size of the body. If you please, after all said, enter after what? Enter after what? I don't understand. Prudently. Enter after what? You added the word prudently. I don't know what that means. Enter after the signal. Yes. What is the signal? The signal is what we're looking at, one of the 12 major signals. What are we looking for the next day? Bullish confirmation. So if we saw a bullish candle or a bullish signal, what don't we want to see the next day? We don't want to see them open down here because that's not confirming the signal. We want to see them opening up positive. So what's the logic of seeing a candlestick buy signal? You want to see confirmation that the bulls are still now in control. If you did an option trade, how many, I don't know what a DTE is, would you use for? Yeah, so Jeremiah, I don't know what a DTE is. I thought it was days. That's up to each individual. Dazed expiration. That's based on how aggressive you want to be. Maybe I think this has got 2 weeks running. I'm usually going out 2 or 3 weeks. If somebody thought it was going to be real aggressive, maybe they do 1 week. Or if this was a Wednesday and they thought it could still move by Friday, yeah, so it all depends on how aggressive each individual is. They don't have to be, the tails don't have to be equal. Because, yeah, this is a doji, but you can see the tails aren't equal. This is a doji, but the tails aren't equal. It's the small trading range inside the total trading range, or the small body inside the total trading range. Andrew, I'll get to that. I guess I can do it now. Right now, we can see that gold is trading back up. Silver is trading higher. So that means a lot of the, and that's what I put into the recommendations last night, that not only the 3 that we recommended, but said that any of the silver stocks could be bought on positive trading. So you can see what happened on this one. There was a bullish Harami, bullish confirmation, and if it opened positive, what type of pattern did we have? We had a bobble breakout, which implies more upside. Where's our upside? Well, at least there's a gap right here that could probably be a potential target. Yes, on a doji or an indecisive day, the body color does not matter. Again, they don't have to be equal on because what you're really seeing is that they open and close are very close together. When you see a best friend signal forming during the day and also now quite above the T-line due to a big green candle, do you buy intraday or do you wait to tomorrow for definitive confirmation? Hold on for 1 second again. Yeah, in the chat room, we've got Trader Abe, who usually comes up with some very good identifying big breakout moves very early. For example, today he, YGMX. Oh, pshaw. Oh, does anybody remember the one? I thought I wrote it down correctly. Was it YGMX that Trader Abe was trading today? Darn. YGMZ. Okay. So where do you buy this? Went from 4 to 17. Do you buy here? Do you buy here? I mean, where does it become overbought? Well, that's where you go to your 10-minute chart. So, might be buying here, wouldn't be buying here, would be buying here. Because what was it telling us every time they were buying? They weren't closing below the T-line. Where would you take profits? Probably right here. Where could you buy back? So you could use the 10-minute chart on the on something that's moved huge, because at least if you're buying right here, even though it's up at that time 100%, you know they're still buying, and they haven't turned around until they close below the T-line. All right. Matt, Heiken-Ashi is kind of a vanilla method to trade candlesticks. It's kind of a combination of the previous trading. So it works a lot better when you're trading longer term. So here is the best combination that you can come up with. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a sell signal and a close back below the T-line. Let's go to this one, which would be much more. So there was your buy signal. Look at your breakout of the T-line off the 50 with a doji sandwich gap up. How long do you hold on to this? Where do most people buy? They buy exuberantly at the top. If you see a gap up in the overbought condition, got two strategies for taking profits. Either you start taking profits right away because it gapped up and started selling off, or you put your stop at the previous day's close. On the other hand, had this opened positive and started trading positive after gapping up, what was our alert to get ready to take profits? The gap up in the overbought condition. So if this opened here and started trading up, you put your stop at where it opened, because logic says if it comes back down through there, that was the exuberance at the top. No, SP, if the market is not selling off and you see a doji and it opens positive, what's our doji rule? First of all, you got your stochastics heading up. You've bounced off here and it opens positive, you can start buying right away. Where do you stop out? If it came back and closed back below the T-line. You can use Heiken-Ashi. Well, so here's here's back to the point I was making. Heikin-Ashi is kind of a vanilla method. I helped a group of investors write the formulas for Heikin-Ashi many years ago, probably 15 years ago now. The best combination is if you know that the candlestick signal is the graphic depiction of everybody buying and selling, or a graphic depiction of investor sentiment, and the T-line we know acts like a Fibonacci characteristic. It acts like a natural support and resistance level of human nature. When you combine the two, that is the most effective trading technique or combination that you're going to come across. Heikin-Ashi is just a little bit too vanilla. Alan, yeah, use whatever works. You can put whatever you want to on a candlestick chart because the most effective indicator is the signal itself. Everything else becomes a confirming indicator. There is a package you can buy that you can download right onto Thinkorswim. Bill, that package should be in our products and services area, or you can email Abraham at candlestickforum.com. Let me get to some of these because we're not even getting through these. We recommended the Morningstar signal the other day or today on MGI. The only reason I didn't recommend it yesterday is because we had 3 other stocks that we recommended. Each day I put out 3 or 4 stock recommendations. If we think the market's going up, you might see 3 longs. If we think the market's going down, might see 3 shorts. If we don't know which way it's going, 2 longs and 2 shorts, depending on how the market opens. So IPOB was another J-hook pattern setting up. All we can do with this one is stay long as it stays above the T-line. So this one I was trying to get to after showing Overstock. Overstock was a Morningstar signal being confirmed. We've been following this one because of the magnitude of return. At one time, it went from this level up to this level, which means we saw a Morningstar signal in this one today, closed right at the T-line. If this opens positive tomorrow, you can be buying because of the return or the reversal of the Morningstar signal. And secondly, the magnitude of return. It moves from 5 to 7. 2 points on a $5 stock, that's a good 40% return. Okay. Let's see. Dang, Jiminy Christmas, whose handwriting is this? I don't know what that was. How come I can't even read my own handwriting? This one was another J-hook type pattern. This is in the wrong place. I don't know what that one is. But look at these slow curves. That usually indicates another move to the upside. U.S. Steel, setting up for another J-hook pattern. DDD, 3D, setting up another J-hook pattern. Oh, was it Capri? Maybe that was it. Yep, that was it. Ah! Thank goodness somebody can read my handwriting. Capri. There's your doji sandwich. Now, a doji sandwich, for those that are new in here, is very simple. It's a bullish candle. Look at our little morning star signal. Let's make this bigger where we can see what we're looking at. Kind of a morning star signal. Then we had a doji sandwich. Big candle, a doji, and then what's our doji rule? It's going to move in the direction of how they open after a doji. Opens positive, trades positive. You can see that candle's usually the same magnitude as that candle. What's that tell us about our resistance level? It broke out. And what do we know about a doji sandwich? There's more upside. Bob, hang on to your individual ones. That one is not very pretty. You've had a big left-right combo. You've seen selling. I'd put a sell stop right here. If I was long, if it came back down through these lows, it's coming back to test the T-line, filling this gap. But right now you can see they're having a hard time. Every time they try to take it up, they bring it back down. All right. So here's another J-hook type pattern setup. Kirkland, ever since it came out of here, look how far away it moved from the T-line. If you took profits, now you have a doji sandwich, another one moving to the upside. Oops, we did Goss, right? Yeah, I have that. That was a fry pan bottom breakout. Now, Billy, we've got some options on this one. There was that J-hook pattern. That's what you expect. And notice how long we stay in this. You've seen sell signals, but they didn't confirm. They didn't confirm, number one, because it didn't open lower the next day. Number two, not only are you above the T-line, but you're still above the 3T line. And if you're above the 3T line, it obviously tells you there's a lot of strength in there because they're not coming back to the T-line. If a doji sandwich is far from the T-line, what is a typical entry point? Probably if you're way up above the T-line, you're not buying at that point, you're holding. So you wouldn't be, just because you see a signal way up in the overbought area, doesn't necessarily mean you want to be buying. Anytime somebody says, could I be buying here? My answer is no. You should go back and say, where should I have been buying? Look at my J-hook pattern that started on a bullish flutter kicker signal. So again, everything that you look at on candlestick analysis is just common sense. We're trying to stay away from buying exuberantly at the top. We're trying to find out where a pattern is just starting. This is called a T-line crunch and kind of a bobble breakout. And you can see the rounding bottom. This one, you shouldn't be afraid to be buying on positive trading. Let me swing to the biggies real quick. Tesla is still trading positive. And notice the one thing that hasn't happened to Tesla the whole way up. They haven't been able to close it below the T-line. Now it's right here in a breakout. If it trades positive, where do you think the next target is? Probably coming back up into this trend trajectory. Netflix. Kind of your J-hook pattern. Big fry pan bottom. Let's see, make this a little bit smaller. And it broke through this area. What do you do on this one? You just stay long until you see a sell signal. Apple, same scenario. Did a little gap up. You're probably in a 45 degree from here. Okay. Oh, that's right. Tesla is being put into the which one of the indexes? David, hold on to your individual ones. Every time where you're up in the overbought area, you want to continue to keep your safety stops in place. So this one looked like it was working well. So if you were buying or if you bought on this day, Where is the logical place that if the bulls were in control, that it should not trade? Should not trade back below the open of the previous day. Because if it does that, that's too much selling pressure. Fossil. You see a doji in the overbought area. Where's the logical place to put your stop? At the low of the doji as your safety stop, because if it comes down through there, you're probably heading back to the T-line. So what do you want to keep? What do you want to keep from having to rectify? That if you didn't stop out here and you finally closed here, you're trying to make up all the losses. I would, and I am just as happy to stop out with a little loss for the day, thinking, oh man, I was hoping this was going up, then sit with something like this, thinking, what was I thinking? I should have been stopped out. So this is why I always have a safety stop in place. Overbought condition, that far away from the T-line, where's the logical place to put your safety stop? At the low of that spinning top doji. Because if it comes down through there, where do you think your first likely target's going to be? Back to the T-line. So you've got a rounding bottom that traded off on grow generation. So what do you do with this one? If it opens lower tomorrow, you close it out because it tells you it's kind of topped out here. If it comes back up through this level, you can be a buyer because that tells you the J-hook pattern is in progress. Bigalow, you can put stops in, but the problem with putting stops in options is they can come hit you pretty quick. You can also put in a contingency order that says, if this stock trades back below this level, close out my options. Now, the problem with that is you're probably going to get hit on the bid side. So if the bid was $2 and they were asking $2.40, they're going to take you out at $2 instead of where you might have gone in and gotten out at $2.20. Okay, apps was easy to identify that when it broke through this level right here, you're now in a new territory. Let's make this one smaller. So if you can watch what everybody else is kind of watching, where there's a resistance level, you kind of had a piercing signal, doji sandwich that broke through. That told us now we're in another wave. For your safety stop, how far do you go below the previous day's close? Well, if I was picking out something, it doesn't matter how far below. Because if I was looking at something like this, and I was long, what are my decision-making process? Well, I'm gotten back up here in the overbought area. I've moved a little bit away from the T-line. It should be moving in this direction if it's still bullish. I better put a stop just below. Doesn't matter whether you put it at the low of the previous day or 3 pennies or 5 pennies, something that just tells you if they're moving in this direction, you want to be out of that position. Because what's our doji rule? They're going to move in the direction how they open after a doji. Jennifer, Jennifer, Jennifer. Jennifer, Jennifer, Jennifer. Everybody should be learning the 12 major signals. That's your bread and butter. That's your bricks and mortar. This is a kicker signal, where it opens here and closes here. The next day they open it at or above the previous day's open and go in this direction. Basically, they've kicked the investor sentiment 100 more times. That's right. A piercing signal. I can't remember which one was the piercing signal. A piercing signal is where they open below any of the previous day's trading, not just the body, the trading. And then they close it more than halfway up the previous candle. That's a piercing signal. This is a bullish harami. Western terminology calls it an inside day. They open it above the previous day's close, and they close it below the previous day's open. It's called harami because in Japanese that means pregnant woman. There's her body and there's her little belly. If Apple, it's not a good buy. You could be buying it with the anticipation it's going up further in this 45-degree. It wouldn't be the best place to buy. Yeah, it's probably a good place to buy. Another slow curve. Little doji, more upside in the stochastics. This one can be bought on positive trading after breaking out with a doji or a kind of a bullish flutter kicker type signal. Is the AEMA the focus and the candle simply understood as confirmation signals? No, it's the other way around. The signals are the top priority. The T-line is a good confirmation. So a piercing signal can turn out to be a kicker signal. No, Jace. How? No. The next day. No. They're two completely different things. Did I explain this wrong? This is a kicker signal. It opens here and closes here. The next day opens and goes this way. A piercing would open down here and then come up through the halfway point of this candle. This one did have a good chart. It's potential, but it's not. It's not really a J. It has a potential if it can break through this level right here. So if you can see what everybody else is obviously watching, which is kind of a resistance level, I'd be more apt to be a buyer of it up in this area. Are we talking about the same thing? Jace, a piercing signal can turn out to be a kicker signal. No, no, I can't figure that out. Yes. On the gap up. No. Even if it does a gap up, all it's doing is confirming the kicker or the piercing signal. They're completely different signals. I'm trying to figure out what you're looking at to come up with that question. So here's another one. There's a nice little bullish confirmation. Look at all your dojis. Remember, if a doji means indecision between the bulls and the bears, a series of dojis means greater indecision between the bulls and the bears. That gives you potential of coming back up into this range. Oh, that one I scribbled. That's your best friend signal. So this is where what we call convergence analysis. Convergence analysis. Look what happened. Look where, after popping up on that Morningstar signal, hit the resistance level, drifted back to where? To a level that everybody was watching to see what they would do at the support level. And what happened? There's your doji gap up, your best friend. So number one, you had a doji gap up off the 50 through the T-line, through this downtrend. What's that tell you? The next wave is in progress. Okay, I'm going to look for both a kicker signal and a piercing signal. Are you talking about over here? Piercing signal, and then a kicker type signal? Yeah, not in the same. And then that wouldn't have. Yeah, that's technically a kicker signal, but that's not what you would call a kicker signal. It still has the same elements that they gapped it up. But usually you want to see a kicker signal with a big candle down and then a gap it and have a big candle up. AAPS. The difference between confirmation, patterns, signals. Matt, I don't understand what that means. Yes, but this is a failed kicker. Well, I say a failed kicker. Opened here and closed here. Gapped down and went in this direction. This one is probably still shortable because they failed to get back up above the T-line. It's not a great short, but it's shortable. Apps. What of a piercing signal? Almost. That doesn't look like it quite opened below the previous day's low, but this would have been more of your signal, kind of that bullish doji sandwich. HYLN. Is this one of the? So there's a bullish flutter kicker signal. Notice how they gapped this up above the previous days, or right at the previous day's open. Did a doji, and then the doji rule, they opened it positive. So if you took this little doji out, or this little flutter, you essentially have a kicker signal, which is one of your strongest signals. If you please, a distinction between patterns and signals. Okay. This is a signal. That's a bullish flutter kicker signal. It's usually the 12 major signals, which are just 1 or 2 or even 3-day signals. This is a pattern where you can see the wedge, but that's not really what I want to show. Darn, trying to think of. Oh, gosh. That's the pattern. You can see that's multiple trading days, but a big fry-pan bottom pattern. Piercing signal opens below any of the previous day's trading, which means it opens below the shadow to the downside. Where you take profits on Goss? On the next sell signal. If this came up here, and then let's say it opened here and closed halfway down, that would be a dark cloud, the opposite of a piercing signal. Let's see. So this is a combination of a Morningstar type signal. It's not a pure Morningstar signal, but it's a Morningstar signal followed by a doji sandwich, or your morning sandwich, which is basically a McMuffin. And if a morning star signal tells you there's a high probability there's been a reversal, and a doji sandwich tells you there's more upside, when you combine it, it just improves the probabilities that that is going to have more upside move to it. So we're looking for J-hook patterns. Now there is a signal. That's a little left-right combo, a doji followed by a bullish engulfing. You can see which way it's moving, a J-hook pattern. That was the same thing we pointed out on Domo. This was kind of a big fry pan bottom J-hook pattern. Again, putting you in situations where the probability of being in a good trade is extremely in your favor. So this again, I keep telling people, this is not rocket science. Human nature works the same way time after time. This is a doji gap up, your best friend. What's the implication? We're still in a strong uptrend. With so many opportunities, do you limit yourself to 10 open positions at once, or how many symbols do to a trade at once? Greg, if I've got 10 positions on, that's my maximum. Now I've got the opportunity that, let's say I'm in a profitable position. We bought a lot of these oils when they did J-hook patterns off the 200. Now it looks a little bit iffy. And if I see something that looks iffy, stochastic's heading down, we had a sell signal, we're not trading below the T-line, but we're not trading up. I don't want to add new positions. I want to keep it at 10 because that kind of creates a self-discipline to say, well, this one's starting to look iffy. Let's close this one out if we have a much stronger buy over here. Hold on for 1 second. If I have sneezed once today, I've sneezed 50 times. So what that does, thank you, is takes me out of positions that might be getting a little bit soggy and moving back to better positions. At what price do we return back in APA? I don't understand that question. At what price do we return back? Snow allergy, yes. But that yellow snow tastes so good when they put lemon in it. Oh, what price do we buy back? Well, I'd be watching. If I took profits here, I'd be waiting to see if they're going to do a J-hook pattern and probably be ready to buy if it came back up through that level. So Occidental, we closed this one the other day because it had a big sell signal in the overbought area. And since then, even though it's barely stayed up above the T-line, you have to ask yourself, is this the best place to have my money, or is there a chart out there that looks more like this? Okay, A, all right. All right, I wrote down a few here. Here's another one. The best friend, Doji Gap Up. And it did a Doji today. So what do we know what to do here? The Doji rule. If this opens positive, we can start buying because that tells us, look how it was indecision, trading, in this case, off the 34, and then gapped up through the T-line. Started trading positive. Or has the potential now of wave 1, wave 2, going into wave 3. NNOX, best friend. Wave 1, wave 2, a best friend is a doji followed by a gap up, especially coming out of the oversold area. So the simple logic that the Japanese race traders provide for us Because they say if you see a candlestick buy signal in the oversold area, get ready to buy. You realize it's 9:30? Holy smokes, we were supposed to be done at 9. What did I just do? NNOX. Let me do these real quick. Another best friend on Lennar, and it's breaking through this level. That one you could think about buying. GameStop. There's your doji sandwich off the 50. There's a little gap, so at least if it started trading positive, at least you have some running room into a profitable trade. And LQDT. This has the implication. Look at your slow curve breakout. Now you have kind of wave 1, wave 2, in this case sideways. Now they're going positive again, looking for wave 3 to be the same as wave 1. All right, so with the markets heading in this direction, I guess the market closed at an all-time high today. If it breaks out through this level, we've got a strong move over here, then a wave here. If it breaks up through this level, that means another strong run. And there's still good short positions working. So we always recommend, if you have got 10 positions on, maybe 8 of them are long and 2 of them are short. So CPA, one of the airlines, still short. ADS has never been able to get back up above the T-line. You can stay short on this one. We were short things like Red Robin, but you can see what happened as soon as they hit the 34. There's your bullish Harami telling us the selling has stopped. Even though they haven't closed above the T-line, you ask the same rhetorical question. You're seeing buying down here. That's what's causing the green candles. They're opening it and trading positive. So even though it's not up above the T-line, it's telling you, yeah, our probabilities of being short is lessening. Let's close this out and move on to something else. A positive open means if the market is, we wake up and the pre-market futures are showing that they're not opening down here, down 200 points, that they're opening and still at least trading in this range, that if you see something, and I forget which one you were probably referring to. Well, let's take something like this, that if this opens positive after this big reversal, meaning if it opens here and starts trading positive or opens somewhere in here, and I usually give it 90 seconds to 5 minutes to see that they're still buying. What I don't want to see is them open it and immediately sell it off. That tells me that they're taking profits. So when do I buy? If they turn around and come back up through the open. Right now the futures don't mean a whole bunch, Lou. The futures don't mean anything until probably about 5 minutes before the market actually opens. All right. First, I was going to ask if there's any general questions on candlesticks. Greg, no, it doesn't matter. Because there's 9,500 trading entities out there. And with very simple scanning technique, we're able to identify which stocks and which sectors are showing strength. And on any given day, whether the market's heading up or heading down or heading sideways, I'm going to be able to find 3, 5, 7, 10, 15, 20 good bullish charts. Even in a bullish market, I'm going to be able to find 3, 5, 7, 10, 12 good bearish charts. So you're always going to have more supply of bullish or bearish charts depending on which way you want to go, no matter which way the market's moving. The fact that the market is moving slowly positive tells you the bullish sentiment has not been deterred, and more than likely the bullish chart patterns created by candlestick signals are going to act that much stronger. On Overstock, you showed earlier, should one have bought on positive open trading this morning after doji yesterday instead of waiting for the doji sandwich to complete toward the end of the day? No. On Overstock, what's the doji rule? It's going to move in the direction how they open after a doji. So you saw the buy signal, you saw a doji. You saw it open positive. So what was the first clue that they were trading positive? Because they opened positive after a doji, stochastic still heading up. And two, they opened above the 50, which could have been potentially a resistance level. Now, had this opened lower today, started trading down, what assessment could we have made at that time? The 50 was going to act as a resistance level, the indecision. The fact that they opened up positive told us, and traded positive, told us they're moving in the direction how they opened after a doji, and the 50 was not going to act as a resistance level. So no, I'd be buying, and I think we recommended that one. We recommended that one. We've been kind of touting that one in the options room for a few days now, ever since this big breakout move. Do you wait for trades to settle from overnight before trading, like maybe 15 minutes? David, there's 4 quadrants, which will be too long to explain here. But if I see something opening in the right direction, I'll watch it for a few minutes. And if the market is trading up strong, and it's trading up strong, I'll probably buy it pretty quick. If the market opens lower and it's opened up a little bit, I'll wait a little bit to see if the market's going to slow it down. So you watch for a few minutes, and if you, to get a real concise entry, maybe you flip to your 10-minute chart. Let's see where the 10-minute chart was. I don't think that was. Now that was the 10-minute chart opening today. But if I saw it trading positive after a few minutes, yeah, and it opened positive after a doji, that's when I'd go after them. Greg, yes, all my positions are equal dollar amount because the biggest bugaboo we all have is our own emotions. So if I've got 10 equal positions, I don't have my favorite. I don't have my emotions connected to a trade. It's just one unit of my portfolio. Because as soon as, if my normal position on a, let's say, a $250,000 account was $25,000, and I thought to myself, man, this one's really going to be great. I'm going to buy $40,000 worth of this one. Where do you think you're going to spend most of your time watching during the day? You're going to be watching the $40,000 versus your $25,000 positions. And then if it's not working, now you start kicking in your emotions and say, well, I know this one's going to work because I analyze it's going to work. I just have to wait for everybody else to kind of kick in and see that why it's going to work. And then instead of closing it out when you should have closed it out, you've held on to it for 4 extra days waiting for your favorite one to work. Instead of saying, this unit of my portfolio didn't work, let's close it out and move on to something else. Sometimes you take previous days wishers into account for kickers, and sometimes just the body. Oh, Whiskers, all right. When do you consider only body? The body is the final decisions. It's where they've opened and closed. Those are the final decisions for the day. The shadows are just during the day. What are the recommendations for tomorrow? Oh, I haven't even done them yet, but we started buying this one. We usually don't buy low-price stocks, but you can see the morning star signal, and you can see they closed right on the T-line. So if this opened positive tomorrow, we'd be buying. Why? Number one, because we got a buy signal that's confirming, and two, it's telling us the T-line's not acting as resistance anymore. Now, why would we buy this $5 stock versus another one? Because if it moves just back up into this area, you've got a 35 to 40% upside potential. I don't remember right offhand. Yeah, I have to go back and do my... I can't remember. Things just might be on AQB. Given today's, should one wait to buy overstock until it comes back to the T-line or buy right away? Back to the T-line, no. Back to the 50, no. That's the wrong way to be buying, because that's called immaculate trading. That if you say, oh, I'm going to buy this, but I'm going to wait for it to pull back to a level that I can get in at a better price. Now that has two flaws to it. One, first of all, if it's pulling back, it's not the strength we want to see after a candlestick buy signal. We want to buy something that's going up, not that the sellers are still in control. And two, you're telling yourself that it's pulling back, and as soon as you buy it, it's going to turn right around and go back up again. That's wishful thinking. I buy based upon bullish confirmation and want to see that the bulls are in control. If a signal patterns are favorable, do you take profits anyways if your dollar position gets too large? No. If I've got a position that is making big profits, I'll either take profits up here or I'll say, all right, I'm staying long until I see a sell signal and a close below the T-line. Does that mean I'm buying at the absolute bottom? Nope. Does that mean I'm selling at the absolute top? Nope. I'm getting the fat part in between. And if I can get a lot of fat part in between versus trying to maximize my profitability by guessing where the bottom is and guessing where the top is, the compounding effect to your account will be huge, much greater than trying to get them in at the best time and out at the absolute best time. Little bird to me that buy when buyers are present. There you go. How does a stock position dollar-wise compare with option positions? It's based upon if I've got 10 positions on or 10 units, and they're all, let's say, $25,000 a piece, maybe I take one of those units and that becomes my option trading unit. So I might have $25,000 in that unit, but I might have it broken up into 3 positions. So what's 1/3 of $8,000 option positions? Now I have, instead of 10 positions I'm watching 12. So no, I'd break that $25,000 option unit into maybe 3 or 4 positions. What periods are best for stocks for the T-line? What periods? All periods. This could be a 1-minute chart. This could be a monthly chart, 10-minute, daily, weekly, 30-minute. They all look the same. And all the parameters work the same way. If I'm buying soybeans on a 10-minute chart.
I'm buying when I see a buy signal.
I'm buying when I see a buy signal. Whoops. This is the daily chart. If I went to the 10-minute chart, I'm buying based upon it coming back to the T-line and trading off the 10-minute chart.
Where would you put a stop on overstock?
Where would you put a stop on overstock if you bought on the open? Boy. Well, just logic says, where would this uptrend be negated? Probably right here at today's open. As long as it stays above that and stays above the T-line, you're still in an uptrend. Using SE. Is SE some symbol? Of a J-hook pattern. Yeah, you'd figure that it's probably coming, you can see the trend channel. It's probably coming back up to the top of the trend channel, which would make this wave and this wave approximately the same.
No, that doesn't look like a fry pan.
No, that doesn't look like a fry pan bottom. That's just an uptrend that's staying above the T-line. Okay. I guess, Jim, go ahead and do the double line. Just keep your request to 1 so that we can get out of here before Santa shows up. And Jim, go ahead and do the next double line. What is this? Craft? All you can do here is stay long. It's not a very exciting stock percentage-wise, but as long as you're above the T-line, you can stay long.
What did you say?
What did you say? What did you say? Whoops. All right. I think I'm still scrolling. I'm going to read more about Hines, who is also from the Pittsburgh area. Is that a belt hold? No, that is a long-legged doji hammer signal. If this opens positive, you can be buying it. Then just don't let it close back below the T-line. AN, if you stay long, as long as this stays above the T-line. Let's make this a little bit bigger. F-SLY also has been on a recommended list. You can see where it did a bobble breakout. Now it's doing a J-hook pattern. You stay long because over here there's a big gap. So there's your next likely target. Lou, that I would still stay long on Tesla. Now what you might do is the Japanese rice traders say sell one of your 4 bags before you get to the top, meaning if this opens positive and continues up, maybe you start taking partial positions or partial profits and start moving them into other areas. CVIO, notice where it moved to. Came right smack dab to the T-line. Now why is that relevant? Because nobody has the T-line on their charts. So it acts like a natural support and resistance level. Slow stochastics, It's 12.33. Overbought is above 80. Oversold is below 20.
BEP, nothing.
BEP, nothing. That's called a nothing chart. You can't tell whether this is going up or down, and right now it's going sideways in a wedge. I'd have my money someplace else. MMI can be still viable on positive trading. You can, yeah, because you've basically got a wave 1, a wave 2, right smack dab to the 50. If you're buying it, you're still all right. You're not in the overbought area, but anticipate you're in this trend, and then you can just stay long as you stay above the T line. I think HLYN is one of the, are they one of the electronic cars? I wouldn't be afraid to be buying this one. Now, you're in a downtrend, so you got to be a little bit more conscious of if it gets back up here to the moving averages, it's got to break through those to offset the downtrend. And Fisker, that one you can be buying. That's a good-looking chart because of the, let's make this big enough where at least I can see it. You got a bullish Harami. Look at all the indecision bouncing off the 50. Now you've had a doji Harami gap up. I'd be a buyer of this one on positive trading tomorrow. And people have been asking about NIO. Kind of the same scenario. I don't know what this one is. NIO has kind of a little bullish doji sandwich. Breaking this downtrend. That's now, oops, you were at CB, I didn't even see it. That's not a wedge as much as it is a reversal. Kind of a double bottom. CVX, still in a downtrend. Ever since your bearish left-right combo, very simple rule. You can stay short as long as you don't see a buy signal and a close back up above the T-line. I did something wrong there. What was it? UNH. Nothing of any great consequence on this one. You can see the wedge, so you're right in the middle of this wedge. I wouldn't be paying attention to this one until it broke out somewhere around the 350 area. And ICE, that one you can stay long, kind of a J-hook pattern. Too late to buy the J-hook? No, because that tells you if this is wave 1, you got the potential of wave 3 being that same magnitude. ADTN? Yeah. ADTN. That one you can buy. Little doji sandwich, J-hook pattern. Oops, need to scroll. Dang. How am I getting so many extra letters? You stay long on this one. Notice that they took it down and brought it back up above the T-line. As long as it stays above the T-line, you stay with it. If we do AN, you just stay long as it stays above the T-line. Boeing stays short with the expectation that they're at least coming back to this level and maybe this level. There's a gap right here at the 50, so I would stay short until you see a buy signal. DQ, dang, come on. DQ, you can see the slow curve breakout. Looks like a 45 degree. You just stay long. I would put a safety stop at today's low. Genco, nothing. Would not be long or short right now. That's a nothing chart. Smith & Wesson.
Expecting a 45 degree.
You can stay long expecting a 45 degree. I would probably use the halfway point of this candle, which is probably the T-line, as your stop.
That's not so much a fry pan bottom as it.
That's not so much a fry pan bottom as it was just basing here on the, you don't have that rounded trajectory. S-Pro, that's, you stay long, you got to be careful. That might be a tweezer top. If you're long, use the T-line as your stop. I saw on our history channel that Heinz, they were at a, I don't know whether it was a world fair, but they were up on a upper level. And to get there, people had to climb 125 steps to get up there. So nobody was going up to see their exhibit. So he sent his young workers down with, they were, I guess, silver type coins that had printed on there, come to our booth for your free prize. So as all the people were strolling along downstairs, they all of a sudden saw these silver coins on the floor, so they'd pick them up and they'd see, come up to our booth for a free prize, so they would go up 125 cents. And when they got up there, it was a pickle pin. But it was just showed how Heinz had a very clever marketing capability. So stay long on Heinz. CHFS. That looks like a fry pan bottom. Yeah. That one traded off today. If you're long, you stay long as it stays above the T-line. And I'd be a buyer of that if it came back up through today's open. AVDL, you stay long as this stays above the T-line. Notice how it's used the T-line as support on this bobble breakout pattern. Oh, yes, too late. Well, I don't know. Apparently earnings, you could short this one on weakness, especially if it breaks this level. Plug. Plug, you stay long. There's your little kicker type signal. There's your doji sandwich. Kind of broke out through this level. You just stay long on this one. CIIC. It needs bullish confirmation, which would be, if I was going to buy this, I'd buy it if it came back up through this level, confirming the bullish engulfing J-hook type pattern. So essentially it needs to see more bullish confirmation. And Sienna, stay long. That's kind of a J-hook bobble breakout. XIC, you just stay long. Is that the S&P composite? All right. IAG, one of the gold stocks. That one you can still be buying. Kicker signal followed by a doji sandwich implies a lot more upside. And Amazon, you can stay long. You can see you're kind of right here at a resistance level, so it better open positive and trade positive. If it opens lower tomorrow, you're still stuck in the sideways. TTCF, another bobble or J-hook type pattern breakout. That one you can be buying.
on the body or
When you draw a trend line on the body or the wicks, doesn't really matter. Just something where you can see the trend. So sometimes it's the wick, sometimes it's the body. JB. JB. I don't know what that means, Janet. And this dominoes. Not a great looking chart. Not quite a kicker signal. So if it's not a real reversal signal, it means you usually have to watch to see what it does at the first resistance level. Did you say Steve has a course on trading futures? Yes, and it's not very difficult because, remember, candlestick analysis started with the most blasé futures of all, rice trading. And HZO, bounce off the 50, I would suspect you're coming back up to the top of the trend channel. Stay long. All right, last few here, XLK. Just stay long. Okay, we got most of them. JB Hunt, I don't know. Yeah, we will probably be recommending WWR, that if this opens positive tomorrow, you want to be buying because you can see there's kind of a channel in progress. And Bloom, nothing there to get excited about. Wouldn't be long or short. JD.com, nothing there yet until they can get up. You've got a Morningstar signal. Now you want to see it get through the 50 because that would break this downtrend. All right, everybody. The fact that the NASDAQ keeps climbing higher with all the political rhetoric, all the garbage going on in Washington, tells us the investors see something better out there in the horizon. So with that, everybody have a good evening. We will see you early in the chat rooms. We'll see you then.